Last year was marked by volatility, uncertainty, and more than a few economic curveballs. So it's understandable if optimism doesn't come easily at the start of this year. But at least one economist is arguing that the outlook for 2026 may actually be brighter than many people expect.
It's easy to get lost on the way to retirement. Things like taxes, improper planning, and excessive market risk can all lead you astray from your goal of a successful and happy retirement. That's where Liz Whittaberry comes in. She's a holistic financial advisor and the founder of Best Path Advisors, and she can help guide you to a better financial path. This is Retire on Your Best Path with Liz Whittaberry.
Welcome into another edition of Retire on Your Best Path with Liz Whittaberry, founder and financial advisor at Best Path Advisors. And yeah, let's talk about the economy for 2026. An economist is optimistic about it, so should we be as well? And of course, it's interesting at the time we're doing this, Liz, because last week the market was pretty good. And then it had a little bit of some downturn, as it got to the end of the week. And then I've seen all kinds of stories saying that, a big downturn is headed this way. So it's interesting because they're always got something to talk about, right? But we'll go through this particular...
And that's the headlines.
That's the headlines, yeah. There's an economist named Allison Schrager. I believe I said that correctly, maybe not. But anyway, she's got a column. We'll put a link into the show notes there from an opinion column she did talking about that. And that's kind of where we're taking today's conversation from. But how are you doing? You doing all right?
I am doing good. I am doing very good. How about you?
Doing pretty well. Looking forward to chatting with you about this because we are getting, we do see like a lot of stuff. I mean, it's been crazy couple of weeks. January's already been pretty wild, right?
The market has been up and the market has done well at the beginning of January. And a lot of the underlying data has been good, but then we've got all of these crazy headlines and things going on politically and geopolitically that are, kind of rocking the boat.
Yeah. I mean, it's set like crazy new all-time highs, the S&P, the Dow, like everything, just like hit all kinds of new numbers and it started dropping a little bit. It's not dropped crazy amounts, right? It's so funny how the headlines work now. It's like, Dow takes a massive downturn and it's like, 300 or 400 points. It's like, well,
yeah, it's kind of like I stubbed my toe, call the ambulance.
Yeah, there you go. Yeah, exactly. I like that because they do have to kind of keep eyeballs glued, and that's how they, do ad revenue and all that stuff, as we all know. But anyway, let's talk about her 5 reasons that she kind of is optimistic about 2026. Okay, and then we'll get your, take on that. Like, how do you feel about that? And what's your thoughts? Good. Yeah. So reason number 1 from Ms. Schrager is consumers will have more money. Her reasoning is large tax refunds expected in early 2026. That tax policy aimed at, should hopefully boost spending, right? Which typically is what happens when people do get larger tax returns. And I just saw something from the IRS, I think, about 2 or 3 days ago as well, saying sort of the same thing. So what's your first thought there?
Obviously, when people get a tax refund, they kind of treat it as free money. It was already spent because it already left their checking, their savings, their paycheck. And so it's extra money that they'll spend, which is why this tax policy was aimed at giving money back early this year. It is an election, a midterm year, so that could play into some of the strategy going on here. But having an even bigger tax refund than normal or expected, that's going to give us an even bigger impact on some spending boost. And we've got a lot of things that are flowing through with the one big beautiful bill. We've got now, instead of a $10,000 limit for your property tax up to $40,000, we've got the enhanced senior deduction. We've got just a number of things that could put money back into people's pockets and could be a nice thing. And so I do think that will be a boost in this first half of the year.
Well, and we're certainly going to be seeing that here shortly, right, as things start to roll out. So her second reasoning, Liz, is that businesses, same as consumers, will also have more money, right? Corporations can fully deduct equipment purchases intended to encourage those investments and growth. We kind of saw the same thing, right, when they first passed the TCJA back in 2017. So some tax, friendly types of things going on there. And again, businesses obviously drive a huge portion of the economy. So, right, if they're investing in people or equipment or things, that just generally does seem to help the economy overall.
Yeah, and the interesting thing about 2025 is that profits expanded and margins increased. We had tariffs, we had all kinds of stuff going on, and businesses were able to reduce some costs and increase some of their pricing a little bit. And they actually saw their profits and margins increase, which helps drive the stock prices higher. So 2026, expecting to see more of that. Now, having the ability to fully deduct equipment, that's a lower after-tax cost for equipment. That should also help businesses invest and expand. We're seeing a lot of investments in AI. But another interesting thing about 2025 is that the 493 other companies in the S&P 500, not that magnificent seven, but the other 493 made up more of the return last year than those top seven. And we hadn't seen that a few years prior. Yeah. So that 493 was 10.36 of that total 7.9% of the S&P 500 last year. And that's a good thing. We want we want all of our companies to be profitable.
Well, yeah, because if the tech is super high with the Mag 7, right, which is typically what they are, and it has a big, issue, right? Yeah. I mean, what is it typically? What is it like? People, the headlines usually say they make up like 30+% of the S&P, and if they fall, that's a big, that's a bad day, right? So good to see that those other companies were doing better then. Yeah,
it's broadening out, and that's a very good thing for the economy going into 2026.
Okay. Great point. All right. Reason number 3, interest rates will likely or could likely be lower, right? So we already saw some tick downs, right, at the end of 25. Now we've got the crazy, some of the crazy headline stuff going on with the Fed chair and all that kind of stuff. And maybe a different person becomes chair and maybe they're a little bit more friendly, to the administration. So who knows, right? We'll see. But if lowering rates continue to happen, certainly that can be a benefit in some ways. It's a little bit of a double-edged thing, but
yeah, Fed Chair Powell will be finished in May. So we will have a new person that is head of the Fed. Typically, when the Fed chair ends their term, they go ahead and retire. And there's now a question about, is he going to do that or is he not going to do that? He's going to kind of dig his heels in and stick out the rest of his term. So that'll be interesting to see. It's expected right now, when you look at the Fed fund futures, that we're going to have a couple of rate cuts in 2026.
Okay.
And that they will likely happen around the July and October timeframe. Having rates come down is going to be a good thing because that boosts liquidity, that makes financing cheaper, businesses can do more loans, there can be more investments, we can have more mortgages, more automobile loans, all of the things that flow through. So then that boosts some of the spending. Having rates come down is also a good thing for bond values because the bonds that were already issued at a different point in time will see their value increase as rates are coming down. On the other side of that, though, we've got to watch what happens to inflation, because if they cut too far too soon, then we're going to see that inflation could come back up.
Right.
And so it's never a cut and dry thing. Otherwise, it'd be an easy job.
True.
Yeah. I'm sure it's an extremely tough job trying to figure out across the whole nation what to do. But we are thinking that there'll be a couple of rate cuts and that will overall be a positive for the economy this year.
Yeah. And for me, I think the biggest one could be this next one here, Liz, which is energy could be cheaper, right? We know energy is the great multiplier to all of this, right? So, I mean, even taking out the Venezuelan portion of the conversation, if you want to, I think it was just expected that energy was going to be getting lower. So, that reduces everything, shipping, so on and so forth. And that moves the needle quite a bit.
I've seen charts recently that we've got an oversupply of oil. And so that should drive those prices down and keep them low. They're lower than they've been.
Right. And that was just after, 2 years ago, having them saying that even the strategic reserve was low, right? So that can change. That can change a lot of companies' outlooks.
Also in the energy is the cost of energy for us running our home. And one of the interesting charts that I saw was how the significant use of energy near a data center is driving up the cost of energy in those areas. So it's going to really depend on where you live as to how this energy impacts you over the coming years.
That's an interesting point, right? Because these AI data centers, some of these big places are just massive draws, right? I mean, part of the back and forth between, some of the big tech people, Elon, so on and so forth, is that these things require, a ton of energy, and that we're still woefully kind of underset for some of that. So that's a great point. It'll be interesting to see how those areas are kind of affected from a pricing standpoint from their local energy companies. And I know all of us, probably feel like, we can't wait to see it come down. We still here where I'm at, we still get these crazy little charges on there for things. And you're thinking, is this even legal? Like, is this fair for you to put this on there? So it should be interesting to see for sure.
That's why they're pursuing some of the other forms of energy. We'll hear more about nuclear energy and some of these other things that are going to come online.
Yeah.
To
Isn't it crazy?
Just make it feasible.
Isn't it crazy that we're still talking about the advantages or disadvantages of nuclear energy when we've had this technology since the 60s, and certainly into the 70s, but you have two incidences, right? And it just you have the 3 Mile Island here, and then of course you have Chernobyl, and it's just kind of like,
it's scary. You don't want something like that to happen. So you want to know that it's
but statistically it's way cleaner and way more efficient.
Right.
And the accidents are obviously way lower, but it's kind of like the plane thing. When people get into conversations, like technically flying is safer than car travel, right? But more people prefer to drive by car because they feel like the catastrophe level is typically lower. If a plane goes down, unfortunately, you feel like everybody's going to perish, right? Car accident, you feel like you could walk away from, typically, hopefully, right? Yeah. So it's an interesting conversation.
Yeah, that's a good point.
Yeah, it's interesting. And my daughter works in the nuclear field too, so it's kind of interesting to kind of hear some of that stuff as well. So
that is fascinating.
Right. Yeah, it's interesting. Well, she's like it's not that exciting, but she said I'm a glorified mechanic. But anyway. All right, reason number 5, last one, obviously tariffs. And I think that's where the needle on the market started to twitch a little bit here this past week at the time we're talking, at least anyway, Liz. More certainty, or she's talking about this, again, this article is talking about more certainty around tariffs. I think this week it felt like some uncertainty around it. So we will see. But what's your thoughts?
Absolutely agree that the tariff issue could escalate before it calms down. And we were expecting that we were going to get a decision from the Supreme Court and it was going to, kind of get settled. But with Trump's threat last week to use tariffs against the countries that are sending troops to Greenland, then all of a sudden we're back in the mix of that. Now, the markets are not really reacting like it's a big deal yet. Are they down some? Yes. But
right, it's twitching a little bit, yeah.
Yeah, but it's not a huge reaction. And so we'll see how that plays out. I think the markets are wondering if this is really going to be a thing because we have, we have so many of these things that are a big headline and then nothing happens, and a big headline and nothing happens, and a big headline and nothing happens. That I think that the market is beginning to look past some of that rhetoric.
I think you're right. It's kind of like the government shutdown where the market just kind of goes, this is just normal and we're tired of it, so we're not going to really bake it in too much. And I think with the current administration, I think a lot of times what happens is it's like, look, this is a little bit more of the negotiating tactic that is used, probably not even really going to go into play, but it's just kind of that negotiating tactic that he operates with, and typically it does tend to work out in our favor. At least recently, it seems like it has from that standpoint. So maybe the market's doing the same thing, going, well, let's just until it gets real, let's just not worry about it.
Yeah, and when you think about investors and how investors think, investors are trying to make a decision today based on what they expect is going to happen in the future, where the future is going to be, what's going to be up, what's going to be down, what return can I earn per dollar invested. And uncertainty really disrupts that train of thought. Because if you're uncertain, you don't really know what's going to be up or down or where to put money. And that's what makes the current a little more volatile. And we want more certainty. So what we feel like we want to feel like we have more certainty so that we can be investing where we think things are going to be better in the future.
Yeah.
That's what especially the fund managers and the big institutional investors are doing. That for an individual investor, diversification is going to help. You can still get impacted by what's going on in the market in the short term, but if you build a plan where you can protect those short-term funds for your spending needs and position your long-term funds for growth, and you make sure that you have some good diversification, then you're going to have yourself in a better place so that you get the growth that you need.
Yeah, that's a good point. What's your personal thoughts, Liz, as we kind of wrap this up? How do you feel about, looking at all this data? Obviously, you do, deal with this and you're involved every day and you're looking at things. Do you feel optimistic about the upcoming year or a little more pessimism?
I actually think we're going to be up. I think we're going to have a same volatility, like last year. We've got a lot of geopolitical issues. It's a midterm year. We usually do get a pullback in a midterm year at some point in time. But I think the S&P 500 is going to have above average returns, maybe not as strong as it has been the last 3 years, where we've been 26%, 25%, almost 18%.
Right, which is pretty darn good, right?
Yeah, but we're moving still in that direction. We've got a lot of momentum. We've got decent underlying economic data. And, 68% of the time, the market is above average. So since 1950, 68% of the time, the market earns more than 10%. Not only that, when the market is up more than 1% in the first 5 days of the year, it's up 87% of the time for the whole year. And we were up more than 1% in the first 5 days. So it's an indication that we are on an uptrend and that momentum is still there. And so I expect that very well will continue, but with volatility. We've got to have good earnings growth and profit growth and companies reporting things well. And, and then, of course, you've got to be diversified, be thoughtful about where you're investing, because there are a lot of elevated stock valuations and a lot of spending in AI. Make sure that you're assessing, is that good spending or, wasteful spending? But then people should not overreact to headlines or announcements. Don't ignore risks, but don't overreact.
Yeah.
Just continue to stick to your long-term goals and stay on plan.
Well, that's the tough part, right? I mean, it's always tough to do that. And again, that's where, if you think about, like, as we wrap this up, you think about studies that, these bigger firms like Vanguard and stuff put out fairly frequently, is that's where, that's another added piece of the value that financial professionals bring to the table, because we, as just average Joes dealing with this stuff, we don't do it every day. And so we get a little more panicked and maybe we make the moves at the wrong time, right? So having that behavioral, management, if you will, when it comes to our finances is another piece to working with a financial professional. So, the economic optimism is great. A strong economy certainly might lift the markets, and strong financial plan, I think, is what helps people stay confident no matter what the headlines are, because we know we're going to have those, to your point. So at the end of the day, if you want to get on the right path, a best path for your situation, then that's why you talk to Liz, right? You get onto the counter, come on in, have a conversation and a chat with her. And don't forget to share the podcast with others who might benefit or enjoy the content. Liz always does a great job of breaking things down, and she's got a lot of good content on YouTube as well. Find all of that at bestpathadvisors.com. That's bestpathadvisors.com. Liz, any final thoughts?
I think you said it well. That's a very good wrap up. Plans are useless. Planning is everything. And we are here to help you know how to plan.
There you go. All right. Well, if you want to be on your best path, reach out to Liz, and we will see you next time here on the show. Don't forget to subscribe to us on Apple or Spotify or whatever app you use, and we'll catch you later here on Retire on Your Best Path.
The preceding program is sponsored by Best Path Advisors, which is solely responsible for its content. Securities offered through J.W. Cole Financial, member FINRA SIPC. Investment advice offered through J.W. Cole Advisors. Best Path Advisors, J.W. Cole Financial, and J.W. Cole Advisors are unaffiliated entities. The opinions expressed by Liz Whitberry should not be construed as specific tax, legal, or investment advice, nor as an offer to buy or sell any securities mentioned herein. Neither J.W. Cole Financial nor its representatives provide legal, tax, or accounting advice. Persons who provide such advice do so in a capacity other than as a registered representative of J.W. Cole. Investing is subject to risks, including the loss of principal. Due to volatility within the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable, however, their accuracy or completeness cannot be guaranteed.